Hello. Um, okay, welcome everybody to the live class. It's a pleasure to have the very first online meeting with the new community. I'm Trader Benny, and I'm going to be taking you through the London section strategy, where I will give you. Okay, just a minute. I think I need to fix the logistics of the meeting. Okay, I need to be sure that everybody can hear me very well and see my screen. Okay, so let me know if you can hear me and you can see my screen. Okay, so I'm looking at my Telegram. You can send me a message on Telegram to confirm that you can hear me and see my screen. If you can, then let us proceed. Okay, so I'm still looking at my messages. I want to be sure that you guys can hear me. So as soon as you can hear me, please let me know. Mm. Okay. Mm. All right. So I'm getting a reverberation. I'm hearing myself two times, so that means that something's not right. So, but I will fix it real quick. Speak to you. Okay. Okay. I think it's fine. It's fine. Okay, so those of you who are here, please send me a message on Telegram. Let me know if you can hear me. Just I'm going to drop a link now. That's the link to my message, my personal message. If you want to send me a message, so send a message to Trader Benny. All right, guys. I think I just need at least two confirmations, so I should. Okay, good. All right, guys. Gonna take you over the entire London trading strategy, show you how I make a lot of money every morning. Okay, so this thing is really easy. Okay, I'm telling you from the start because um, as long as you pay attention to everything I'm going to tell you, you definitely going to make money with this. I have used this strategy to make a lot of money. Okay, so there are a couple of things that I'm going to make you understand first before we get into the strategy. Okay, so we're going to be looking at the London strategy. Okay, the London session. All right. Um, so there are some concepts that you have to understand. Okay, so first of which is that everything begins with London. Okay, everything starts with London. London is in those days, what usually happens is the banks in London. London is like the capital of forex. London is like the Abuja of forex. It's like the Dubai of forex. It's like the New York of forex. It's like the city of trading, right? Is the capital. That is where the money is sitting. That's where the money is. They are the guys with the money, the banks. Okay, so usually what they do, what they used to do in the past was in the morning, by the time the banks, open, coincidentally, the London bank open is usually the same with the Nigerian bank open. The only difference might be, once in every 4 years, usually there's a 1 hour difference. Okay, but as I speak with you now, the time in London is the same as the time in most African countries like Nigeria, Ghana, and so many other African countries. Okay, so now what this means is that uh, if you're in some of these countries that coincide with the London, you're waking up as the London is waking up. You can absolutely capitalize on this strategy because you're just waking up, you are fresh, you can just hit the market, exploit this strategy, and make money. Cool money every day, guaranteed. I made a lot of money this morning because there was a clean break, which I'm about to show you. Okay, and I'm going to walk you through the entire steps of how I got to make that money. All right. So the thing about the London strategy is that usually the banks they're fighting each other. Okay. Sometimes they all make money. When they all make money, the money that they are making is coming from both people that are doing business around the world, exchanging currencies, and then the smaller traders who do not know what they are doing, right? So they feed the market, right? So sometimes these banks lose. Some of them even go bankrupt, right? So the thing to take note of here is London brings in liquidity. Liquidity means that liquidity means volatility. Liquidity means money. Liquidity means movement, pressure. Okay, it's there's something we call the liquidity sweep, right? If the market plans to go up, right? Now, in order for this market to successfully go up, okay, it needs to first convince people that it wants to go down, right? It needs to first convince people that it wants to go down. Now, That's what the London does. The London move is like this. Okay, it goes the wrong way first before it ultimately goes, the right way. Okay, so you got to be aware of this. All right, that's why you hear some traders say that they are trapped. Okay, so sometimes traders get trapped, right? So usually the reason for this is to bring in liquidity. So the market goes the wrong way first to lure people to move that direction, and then it will ultimately go to the actual direction that it wants to go to. So as I was saying here, if the market is going up like this, if it continues to go up, there will be no liquidity. They will not be able to close their position because everybody will be buying. Whose money are they going to take? Right? Whose money are they going to take? There'll be nobody. So what they will usually do is they're gonna pretend like they want to go up, right? They actually want to go up in this case, right? They actually want to go up, but what they're gonna do, they're going to print huge bars to the opposite side, to the downside in this case. Huge bars to the downside to make you think that they want to sell. Now, what do traders do? Monkey see, monkey do traders. They will do what? They will sell, right? They begin to sell. And then what does the market do? Market starts to go up. Market starts to go up, right? So this is what we see every day. Okay, it must, among all the major pairs, you must find this liquidity sweep, because the market cannot move, the market cannot succeed to print higher highs and higher lows if there is nobody who is trapped. So that's why we always say, do not fight with the market. Don't ever fight with the market. Once you find yourself on the wrong side of things, exit it. Okay, because if there can be only two things. You're either making money or losing money. If you find yourself losing money and it continues and you continue to hold it, you are wrong. You are wrong. You have been trapped. Okay, so that's the thing. So when you're wrong, do not fight with the market. Just exit the trade and look for another opportunity. That's why it is important to use stops, because I hear some people say that they don't use stops. Okay, they may have their own method of managing their risks, but if you're a beginner, it's never a good strategy. If you're managing serious funds, it's never a good strategy. Okay, at every point in time, traders want to make sure that they're not risking more than 1%. Okay, and I always say this, that I mean, if you have $50, for example, if you have $50 and you're worried that if you risk 1% of $50, it's going to be $0.5, which is 50 cents, and you make a gain on this market, you make only $1, right? This is not good mathematics for you. This is not good mathematics for you, because $1 is too small. Okay, you're going to be wondering, when am I going to buy my Lamborghini? So what you can do with your $50 is very simple. Buy a 5k prop firm account. Buy a 5k prop firm account. When you buy a 5k prop firm account, your 1%, your 1% is going to be how much? It's going to be $50. Your 1% is going to be $50. If you make money, if you make 2% on this 1%, you're going to have $100, right? So with $100, I mean, you have a 2% profit here. Even if you lose $50. It doesn't affect you, right? It doesn't affect you. And then overall, over the long term, what you're going to find out? You're going to find out that you're making money. If the prop firm allows you to take maybe 80% of the profit, and you're able to make $500, at the end of the month, which is 10% of your 5k, you make more money than somebody who is using the $50, right? If they give you 80% of $500, you're going to be having about $400. If you have $400, is a lot better than trying to double your $50, because if you try to double your $50, you're going to lose all the money. So I have someone who recently, contacted me that he just gathered money to, pay for the prop firm. And I was happy about it, right? And I told him, okay, I'm going to work with you and see how you can, build um, build the account. Okay, and the MFF one is good because, I mean, the time is unlimited. Okay, so you're not rushing to anywhere, because that of FTMO is good but not so good. Okay, it's good but not so good. Okay, not so good because of the time. Time is psychological. If I know that I have to get 10% from now to the end of the month, maybe space of 30 days or 60 days, it's going to put pressure on me to trade even when I don't have setups. Okay, so the one that says unlimited time frame is up absolutely better. Absolutely, that's my choice though. The only problem I have with them is that if you go for the single phase, all right, you're going to have a trailing stop on your equity, okay, not on your balance. So if you have let's say you have a $10,000, if you have a $10,000 account and you have a drawdown of and you already have your target is 8%, for example. In this case, I think your target is 10%. Now, if your target is 10% and you have made 10,800, okay, no, 10,800 would be around, okay, so that's almost 10%. So you're not there at 10% yet. If you need you only can take a drawdown of 4%. Now if you suffer a drawdown of 4%, you're going to have if it's FTMO, you can lose this $800 and then go back to 9,900 and something, right? But for MFF, if you lose 4% of your total 10,800, they're gonna close the account. Okay, it means that you have failed the drawdown because they trail theirs. So that's something you should take note of. I'm just telling you this because the first problem I feel traders have with any strategy is risk management. That's the first problem. Okay, and what causes this problem is lack of capital. Lack of capital. Okay, so I advise you, instead of putting in $50, $100, $200, if you don't have up to $500 to trade with, get a prop firm. If you have $500, open 3 prop firms, 4 prop firms, 5 prop firms, 10 prop firms. As long as you know what you are doing, before you take the first prop firm, the second one, the third one, the fourth one, the fifth one, the sixth one, you must pass 1 or 2 of them. You must pass 1 or 2 of them, right? And then when you pass 1 or 2 of them, you make any money, you're going to cover up for all the 10 that you bought. Okay, so that's a very smart way to approach it. All right, and then by the time you're taking these prop firms and not passing them, you would have enough time to go back and reflect on your strategy, reflect on what you're doing right and what you're not doing right. Okay, so traders have to take note of this and make the necessary correction. All right, so as I was saying earlier, the London section is really amazing. Okay, because there is the Asian section, which is usually having low volatility most of the time, right? The Asia is not moving. Okay, it's not moving. Maximum of 30 pips, usually 10, 20, 30, 40. Okay, maximum of 30 pips most times. All right, and then you have from from whenever, like from the point where the previous day's candle has closed down to 7 a.m., you have the Asia session. Okay, you have the Asian session, And then from this 7 a.m. down to about 11 a.m., 10 a.m. to 11 a.m. Okay, that's where you see the London. Okay, now London will usually bisect the New York. Okay, so New York comes in, but one thing you got to know about New York is that, of course, New York has a lot of volume as well. Okay, you can't take that away from New York. It's got a lot of volume, a lot of volume. Okay, and then, of course, New York is, if you compare New York to London time, if you're in Nigeria, London time is the same as Nigerian time. Okay, so in Nigeria, when it is 12 o'clock, 1 o'clock, usually a 1 hour difference sometimes, that is when the banks in New York open. The banks in Nigeria will open by 8 o'clock in the morning. The banks in London will open by 8 o'clock in the morning. Right? So the Asian session is from the previous candle's close, that's throughout the midnight, all the way to 7 a.m. Now, from 7 a.m., I'm going to show you the indicator that will show you this range of Asia session. Now, from 7 a.m., that's when you begin to expect the execution of the strategy I'm showing you. Two things can happen. Is either the market wants to go up and continue to buy, or the market wants to take the liquidity and go the opposite direction. This is what I mean. There are only two things that can happen after the Asian session. The market will go sideways during the Asian session. We call this the Asian range. Okay, we call this the Asian range. Now, the market stays in this range. Now, you will see that the indicator will usually plot a line at the top and at the base. This line will stop at 7 a.m. If you open an indicator, and on your chart, you check the time, use your cursor, check the time, make sure that your Asian session indicator is stopping at 7 a.m. on the chart. Okay, and then another thing you have to make sure is that the time you are seeing on your MT4 is the same as your clock. So the current bar that is printing is 5 minutes, and the time is the time has to be the same. I don't want to take out what I'm doing. So the time has to be the same as your own local time. Now, when you have checked that, go to the Asian session and look at the indicator to make sure that it stops right there at 7 a.m. Now, I'm going to take you into the chart very soon. Now, in the meantime, now this is what I'm talking about, right? Now, two things can happen. After the market settles like this, it can push right down, right? With a strong trend bar. Now, like I said earlier, this thing is going to make people think that the market wants to sell. All it is doing is trying to grab all the stops that are set here. It's trying to grab all the stops there. Now, once the market does this, it will start to move up throughout the day. Okay? Once the market does this, it will start to move up. This right here, friends, is what we call the liquidity sweep. Okay? So I'm showing you this because I'm about to take you into the market. Once I go into the market, I will begin to show you these things, live. Right? So this is called the liquidity sweep. What the market did is to deceive people to think that that day is going to be a sell day. Meanwhile, it is a buy day. All right. So I'm going to show you what time frame, how to check for this, how to go in, how to take your entry, how far away your stop loss should be. I'm going to show you as we find the examples. I'm going to show you. Okay, so that's how to get in on it, and that's how to take this particular style. And then if you can be aggressive with it, you can be conservative with it. I'm going to show you the difference. Okay, this is one style. Another style is when the market doesn't come. I mean, the Asian range is not flat, for example. Let me take you right there. The Asian range is not flat. Let me say we have an Asian range that is like this, right? Now, 7 a.m. stops somewhere here. Okay, so this is the Asian range, right? Now, what happens is the market wants to go up. Okay, the market actually wants to go up. Now, what traders will do is from 7 a.m., they come back to the Asia high to see if there's going to be a breakout candle here. Once this level is broken, traders expect the market to buy with their stops at the previous swing. And then what do you expect the market to do? I mean, it continues to buy and buy and buy. Okay, so I'm going to show you how to get in on this. So this is a situation whereby the market London just breaks and continues. What you're capitalizing on here is the high of the Asian range, the high of the Asian range, and the breakout candle. So when you see the high of the Asian range and you have the breakout candle, what you have to do next is to just join and then you buy. Okay, I do this every day and I make money. Right? It's very easy. Okay, so I'm gonna take you into the chart now so that I can show you some examples and then define some things. Okay, there are a couple of other things that traders have to bear in mind. Okay, there's something we call the high of day, the low of day, the so as I open up the examples, I'm going to show you all these things as I'm explaining them. Okay. So first off, the platform I'm using, if you're wondering what platform it is the CTrader platform. Okay, and if you have any question to ask me, okay, because usually I do not like to take the questions, now while I'm teaching. So, but if you have questions you want to ask me, just go over to the Telegram channel and send me a message. Okay, so just send me a private message on there. I will get the message and then I will respond. Okay. Or just send me a message on Instagram. Right? You can send a DM. You can send a DM on Instagram and I'll respond, okay? Okay. All right. So now this is the CTrader platform, and it's very easy because you can very simply just call out your indicators. Okay, there are a lot of online custom indicators. There's a lot of algos on here. This is by far the best platform for trading that I have come across for retail trading. Okay, this is the best platform. All right, it's called the CTrader, and it's not all brokers that support the CTrader platform. I use IC Markets and they support the CTrader platform. I have the other platforms as well. I have the other platforms that I use. All right. They only have like the MT4. That's why I see sometimes on my trade I use the MT4 platform because they do not have the CTrader. But I do my analysis most times on the CTrader platform. Okay, so I'm going to encourage you to use it because it helps you if you're trying to manage your risk. You're going to see a lot of very, very amazing tools that can help you, to manage your risk. on the CTrader platform. Okay, so yeah, that being said, I'm going to call out my indicator. I'll use the Asian range. Okay, so this is the Asian range is set to 8 a.m. So I'm going to make sure that if that this 8 a.m. coincides with 7 a.m. on my chart. Okay, so it's giving me a history of five Asian range, but I don't want that. I want more, so I will just increase to 50 so that I can do 50 examples. Right. So there you have the Asian range. Okay, so that is the Asian range. I'm sure you cannot see it yet. I'm gonna go to the 15 minutes time frame, or better still, 5 minutes time frame. Okay, so this is today's Asian range. All right, it's still on. That's why the line is continuous. For yesterday's own, this is yesterday's own. Okay, so this line here, I'm hoping you can see it. Down to this line here is the Asian range. So like I said, I'm going to make sure that it is stopping at 7 o'clock. So you can see this is 6 o'clock. I know you might not be able to see it. It's really small, but at the bottom somewhere here, when you look at the time, you see that this is where the Asian indicator stops, and this is where I have on the time. You know that everything you see here is time against price. Okay, that's the chart. This is time plotted against price. So it's like saying by 10 o'clock, the price was 20 naira. By by 12 o'clock, the price was 22 naira. That's what you have here. So I'm looking down here to see that the time is 7 o'clock. So what the time is, where it's stopping at the moment, is 6 o'clock. So I'm going to go to the indicator and change the settings. Add 1 hour to the time. This is important, guys. This is important, so that whether you're using your own platform, you go online and look for an Asian indicator, because they've got this indicator also on other platforms like TradingView and every other place. There's the Asian range indicator. Even on MT4, you can download it into your MT4. Okay, those of you who are using your mobile phones, you only need to what's it called, you need to just pinch your screen and then put the line manually. Okay, so look at the high and the low from the close of yesterday down to 7 o'clock in the morning. That's going to give you your Asian range. These levels are important, guys. They are important because breaking out of this level is going to determine whether we're going to buy, and then taking a liquidity sweep from the level is going to determine whether we're going to buy or sell. Right? So this is a very simple strategy. I might be taking my time to explain it, and then it's looking like, but it's really simple, and I tell you, you can make a lot of money with it. I'm being very honest with you. You're gonna make a lot of money with it. Just watch. Okay, and I wasn't joking when I said I took an account from $3,000 to $230,000. If you look at my Instagram, you're going to see I shared the withdrawal history. And then you see that the total withdrawal I made within that space of 9 months was about $230,000. Okay, just look at my highlights and then look at my track record. You will see, I think I shared that as part of my track record. Okay, so you see the withdrawals, because my belief is that if you're a trader, what makes you good is your ability to withdraw, not make deposits. Okay, so you must be making withdrawal. If you're not making withdrawal, then you are not doing good business. If you wake up in the morning and go out to do your job, and at the end of the month you cannot say, this is how much I made, this is my salary, or this is what I've earned, you're in the wrong place, man. You're in the wrong place. So follow the strategy. If you don't have any good strategy, if you might have a strategy that works for you, it's fine. But you see this one, when I was talking about how it begins the move, I'm serious about that concept. Okay, because if we know that, I'll take you back to my worksheet. If we know that, listen to this revelation. If you know that this is daily, let's say I open the market, this is daily time frame, and we have daily bars, continuous daily bars, right? We have daily bars moving up, right? These are all daily bars. Now let us assume that there is something that tells you, okay, that today, being Wednesday, is going to be a red bar, right? There's something that tells you that today is Wednesday and we are definitely going to have a red bar today. Okay, a red bar today. Now, if you know that the market is going to be bearish and is going to have a red bar or a black bar, as it is in my own chart, right? Now, Asian range, watch, I'm going to break this candle down. This is daily. Everything here is happening in daily. And then this is an example of a trend bar. And then this is, if you're taking notes, you got to take this note. We do not have a trend day every day. Every day is not a trend day. We can only have a trend day or a trading range day. Okay, so we can't always have a trend day. Trend day is categorized by a trend bar, while a trading range is categorized by small bars like this. Okay, so that's why you see on the daily time frame you can have a small bar that looks like this one, in this example, right? So I'm talking about dojis, I'm talking about spinning tops, all these ones are showing you that day is a trading range. And then some days are trend days. Okay, so this is a trend bar. If you open the lower time frame, like 15 minutes, what you're going to see is something like this, showing you that day was a trend. Meanwhile, on the range day, if you have a range, this is important because sometimes you're going to be fighting with the market, thinking that the market going to go up, not knowing that day is a range day. So if it's a range day, you do not expect too much movement. Today was a trend day. Okay, and there was movement in the market. So traders made a lot of money. Right, so it's not every day that we have a trend day. Some days can be a range day. Like this now, this candle is saying that the market has been fighting up, down, up, down, up, down, up, down, up, down, till it eventually closed. This is where it started. This is where it closed. If you add that together, you're going to have something like this. That's a range. So the market didn't go up, it didn't go down. London came, it didn't go up, it didn't go down. New York came, it didn't go up, it didn't go down. London intersect with New York, it didn't go up, it didn't go down. It was just bouncing from, top to, from the bottom to the ceiling throughout. So don't fight with the market. But on the gracious days, and then one thing you have to know is that out of the 5 days of the week, every day cannot be a trend day, and every day cannot be a range day. Out of the 5, you must have at least 2 trend days. At least 2. Usually there are more, but you must have at least 2 trend days. Days when the market will move fully to its maximum potential. All right. So take note of that, and then you will usually have at least 1 range day. At least 1 range day. At least 1 range day. Okay, so take note of that. At least 2 trend days and at least 1 range day, because the beauty of the market is volatility, is movement. Why we come to the market is because it's moving. Okay, so it moves, but it won't move every day. It will not move every day. Some days it will be quiet. Okay, So back to what I was explaining. Now this is a trend day. This is a trend day. Okay, this is a trend day. Now I know something told me. I'm going to tell you what that is, if time permits. Okay, something told me that today going to be a trend day. Now, if I know that today going to be a trend day, what do? I will start. Asia will be like this. Asia going to be like this. You see it. This is Asia, right? This is Asia. Now, the next thing that will happen is what? London will come. This is what we are looking for. This is the full size of the bar. Asia takes just about 20% of the full size of the bar. London break comes in. When the London break comes in, it will move to about 1/3 the full size of the bar. What we're saying is that if the average movement of this pair, let's say is GBP USD, for example, right? If the average movement is, let's say, 120 pips, that's what the daily candle will travel. If you measure each daily candle from top to bottom, right? What you will find is that most of them have 100 to 120 pips. Now, I'm saying that Asia will take about 20 to 30 pips. London will come and take about 70 pips. And then New York will bring in its own volatility. Now, that's why what you see from 11 o'clock is that from 10 and 11 is that the market becomes very quiet because the London guys have gone on their lunch break, right? The London traders have stopped trading. They've gone on their lunch break, so the liquidity drops until London comes in again. And then when the London come in, you see usually there's a pullback. And then the market will give you the full size of the candle until the close. This is the way the market moves, usually. Okay, that's the way it will usually move, right? So sometimes, what do you find? Now, in this case, I have just given you a breakout. Okay, so Asia was flat here, Asia was flat, and then it broke out here, right? Asia was flat here, and then it broke out here, right? Now, sometimes, instead of breaking out immediately, it will pretend as if it wants to buy, so that traders will be forced to think that that day is going to be a buy day. Meanwhile, they are only luring people to take long position. When they take the long position, what the market does is to now fall and come down to the actual direction. This is the liquidity sweep. This is what they trade. This is what these guys, they do almost every day. Almost every day, right? So traders have to be cautious of this. Okay, so when we get into the chart, I'm going to show you the examples of all these things. Okay, so that being said, back to the chart. So I believe you can see this now. I have extended. Okay, I haven't yet. Let me do that. So these are the indicators. I have just the Asian range. So I'll go to the settings and change from 8 o'clock to 9 o'clock so that it's gonna stop at the Asian range will stop at 7 a.m. Okay, so Asian range, now you can see the Asian range has extended to 7 a.m. Okay, so Asian range has extended to 7 a.m. This is the top of the range. Okay, let me use another line that will be thicker than the indicator has. This is the upper part of the range, right? And then this is the lower part of the range. That's the London. And then in this case, you can see that there's a liquidity sweep here. So the market pretends to go down and then eventually goes up. Okay, so that's the strategy. That's the strategy, right? The market pretends to go down and then it goes up. All right. So what happened here? Immediately it got to 7 a.m. Traders wait to see if the market going to sell, right? Traders wait to see. Traders have something in mind. Traders want to either buy or sell. Okay, traders want to either buy or sell. So if I know that yesterday was going to be a green candle, right? If I know that yesterday was going to be a green candle, when the market is coming down this way, I'm waiting for a sign. I'm waiting for a sign to join in on the long, because I know the market is only pretending. After 7 o'clock, it will go the wrong way and then go the right way. Okay, so take note of that. Now, what do you, this is only one example. I'm going to show you so many more examples. Now, what are the pairs? What are the pairs? I'm going to talk about this. How do you set your stops? What do you need to see to take an entry? I'm going to talk about this now. And I think with that, I won't have so much more to talk about. Then we can close the meeting, because I'm going to watch the Champions League match. Yeah, I watch football a lot. Okay, so you can use okay, I'll talk about that real soon. So you can use EU, GU, any U. You can use any. So mostly GBP pairs, Euro pairs, they will work very well. Okay. So I'm just going to show you a couple of things. Now, from what you're seeing here, if I'm to explain this strategy to my granny, because I do not adopt a strategy that I cannot explain to my grandmother. If I explain the strategy to my grandmother and she doesn't understand, then I will go and simplify the strategy some more. Okay, a strategy is supposed to be simple, supposed to be easy, right? So what we're saying is very simple. You see, this is the Asian range, the low, up to 7 o'clock. This is the high up to 7 o'clock. Now, I'm going to tell you how to know whether the market is going to be green or red, meaning whether the market is going to buy for the day or sell for the day. All right. And how you know whether you are right or wrong. These are two important facts. So you can say, okay, I believe the market, the bar, is called bar by bar analysis. So you can say, I believe the bar going to be green today, but you come to the chart and the Asian range and the breakout does not confirm to you that is going to be green. Don't fight it. You just leave it. You know that it's not going to be green for that day. Okay. So see what we're saying here. What I have here is the market after 7 o'clock, market tries to go down and then it is rejected. Clearly, you can see, traders can see that this is a rejection. You have a pin bar here. You have a pin bar here. So this is a pin bar, right? This is a pin bar, okay, followed by a bullish engulfing bar, right? So there are three candle formations that I'm going to need you to know in order to use this strategy. Number one is a pin bar. Number two is a bullish engulfing bar. Number three is an indecision candle followed by a trend bar. Okay, indecision candle followed by a trend bar. Okay, so these are like the important ones. Yeah, you can send me messages on my Instagram. That'll be fine. Okay. Yeah. So indecision bar followed by, I'm going to teach you. I'm going to show you on my whiteboard. So I'll show you indecision bar followed by a trend bar. Indecision bar followed by a trend bar, or a pin bar, or a bullish engulfing bar. We don't care about any other pattern, because these patterns are these candle patterns are very, 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 very effective. And they're not just effective, they have a psychological meaning. Okay, so I'm not usually fanciful with all the knowledge. I don't think there's any candle out there that I do not know for knowledge sake and because I teach. Okay, but I mean, what's the use knowing all these things if they're not going to help, right? So these 3 candle formation, they are massive if you're going to trade anything. They are massive. They are massive for entry. They are massive for stop loss. They are massive for they are massive for target, right? So I'll show you more. Okay. Okay, let me show you just out of curiosity. Let's scroll through the chart and see some more. Let's see some more London moves. So this is the first one we've seen here. What we see here is a liquidity sweep. So you can either have a liquidity sweep formation or a breakout formation. Okay, so if you want to buy, if you're late, you can join here at the breakout, right? So here we have the liquidity sweep. If you missed this one, you can join this one on the break, right? So if you didn't join here, you can join the breakout, and then your stops will be here. Now, just for me to say it, for those of you who are curious to hear the details, right? If you're going to join in here, this pin bar here, is your entry bar, right? So 2 ways. If you're aggressive, you will use only the pin bar. Set your entry 2 pips above the pin bar, stop loss 2 pips below the pin bar, and your target is going to be 2 times the size of the pin bar. So what I'm saying is, if this is the height of the pin bar, right? That's the height of the pin bar. Now, your entry is 2 pips above, 2 pips below. Stop. Entry 2 pips above, stop 2 pips below. Now, your target is 2 times. This is 1, then this is 2. So your target is 2 times the height of this bar. Now, if you go in with 0.5% on this trade, let's say you're trading a $10,000 account and you're using $50 per trade. If you put in $50 on that pin bar, by the time the market gets to 1:2, you're going to make $100 on the pin bar. That's one way to do it. The second way to do it is you're going to divide your position into 3, so that when the market gets to 1:2, you will take out 70% of the profit and allow 30% to run. Let's say you open 0.03. Okay, you open 0.30, for example. If you open 0.30, when the market gets to 1:2, you will close out 0.2 and allow 0.1 to continue running until it reaches the Asian what's it called, until it reaches the London range, which I'm going to show you. Okay, there's a place where before 10 o'clock, 11 o'clock, the market becomes quiet. Look at it here. It's right here in front of you. From after London takes his move, they go on a lunch break, the market becomes quiet. That is where you begin to take your position out. Okay, so this is that's for the aggressive guys, right? Aggressive guys will use the pin bar, but those who are not aggressive, they will set their stop loss 20 pips below this level. So from here where you have the Asian low, we believe that if the market is going to be a green bar, it's not supposed to finish the Asian range and extend 20 pips away from the Asian range. That is not liquidity anymore. It's no longer liquidity sweep. Liquidity sweep is not supposed to exceed 10 pips, 5 pips. So that's why we're saying go 20 pips away from the Asian session and then target about 30 pips for 1.5. So if you put your stop loss 20 pips somewhere here, right? Your entry is above the pin bar, your target will be 1:1.5. somewhere around here before 10 o'clock, 10, 11. Usually, every morning before 10, 11, I'm done with the market. Every morning before 10, 11, I'm done. And what I do is just the London move. And I use this to grow any account. I grow any account, right? I've tested it on anything you can think about. $10, $100, $3,000, $10,000. I've tested it on anything. It works. Just follow the rules. Just follow the rules. I'm going to show you. Just follow the rules. It works. Okay. Now, this is okay. So on this day, you can see on this day the market is not moving. The market is not moving. Why? Because that day is not a trend day. It's not a trend day. Okay. And then look at the now I've showed you the liquidity sweep. I'm going to show you the breakout type. Okay. For the breakout, of course, we don't have a clear breakout on here. Okay, I think we have a breakout here. Now, this is the same thing. This is the same thing. The market is in a range. This is your liquidity sweep, guys. This is your liquidity sweep. If traders know that today the market is going to sell, if there's going to be a sell-off in the market, right? If the market is going to sell like this, what traders want to see is a liquidity sweep. This is a liquidity sweep. And then you trade the liquidity sweep usually on the 15 minutes time frame. I'm on the 5 minutes time frame here. So on the 15 minutes time frame, you will just see sometimes just the wick. Okay, it shows you that the market has gone to take out all the stops. The market has tried to lure people to think that it's going to buy. Meanwhile, it's not going to buy. It's going to be a big sell. Traders who think that no, it's later going to reverse, they will be trapped all the way to this point, about 120 pips. And then they blow their account. Right? So what you have here is a similar example, liquidity sweep. You can go in on the pin bar here. There is a pin bar there. Usually the market will print one or two of these bars that I have told you. This here is your pin bar, right? If you're not comfortable with this as a pin bar, this next bar here is your engulfing bar. If you say this is an indecision bar, this here is a trend bar. A trend bar is a full-fleshed candle, a full-bodied candle. That's a trend bar. So if you have this pin bar and this trend bar, what you do is to take your entry, right? Take your entry here, and then you move all the way down. Okay. If this is the high right here, this is the high. I want to believe that you can see this is the high. Okay, this is the high. This would have been the first one, but no bar was formed. This is the second time, right? You see this engulfing bar. If you are aggressive, you might have taken, this bar and then set your stop. I don't know if 2 pips will be triggered by this. Okay, but your stops will be here. If you are conservative, your stops will be about 20 pips away, right? So you can see some of the difference now. Now, what happens is it's not every time you find information like this. Sometimes it's just once. Sometimes you see multiple like this. Okay, so the choice is yours, right? So what you see is the market, the trader, after this bar is formed, while this bar is ongoing, he puts 2 pips away from this bar. He puts his entry. 2 pips below this one, he puts his stop, and then of course he might have been stopped out here. That is if this is up to 2 pips. Okay, it is only 1.5 pips, so he will not be stopped out. So from here, from this bar here to this bar is 1.2 pips, right? So if he puts his stop loss at 2 pips, it will be somewhere here. So this is 2.0, and 2.0 you can see it doesn't touch, right? So he will not be stopped out, right? So if you didn't take this one and you took this one with your entry here, stop loss here, 1:2, and then trail. right? You're going to make a lot of money. Okay? You're going to make a lot of money. So, like I said, entry 1:2. At 1:2, take 70% of the entire position. Do not move your stop to break even. Don't ever, throughout your program with me, don't ever break even. Don't ever break even. Okay, I'm going to tell you why. Right? Do not ever break even. Now, you see this area where you put your stop. That area is called the point of invalidation. The point of invalidation is the place where traders all around the world know that this is the level that is defended by the big banks. We know that this place where the liquidity sweep has happened is where the big money is seated, and nothing can move that money as far as London is concerned. So if you move your stop to break even, the market is definitely going to stop you out and it will still move. Now, assuming that you saw maybe some of these things that formed the week were happening, right? Like this one. And you now say, oh, the market has gone. Let me move my stop to break even. What would have happened? This one would have stopped you, and then the market will still move. Just don't move. It's not part of my strategy. Don't move your stops to your entry to break even. That is why what I said is, for beginner traders, for me, I add to my position when I'm right. That's how I become a big trader. When I'm right, I go bigger. If I'm risking 0.5% and I'm right, I will increase my lot size eventually on that trade. You will see that what I'm risking, when I see that, oh, today is a blessed day and I am right and the market is going to be green, as I have said, I'm going to add to position so that I win more because that day I am right. If traders don't know how to win big when they're right, they're never going to be big traders. They're never going to make money. If traders do not know how to capitalize on their successes, use the leverage, use the maximum risk that they can afford to use, and go big and increase their account balance when they are right, they will never be big traders. So if I'm wrong, if I see that it's not working, I will start to reduce my lot size and start taking the losses small when I'm wrong. And then I would sometimes just close it out. Okay? When I see that I'm wrong, I will never ever buy a market that is in the red. Never. I will never. There's nothing you want to do. Put a gun on my head. If the market is against me, I can never add to the position. Never. Ever. I have blown an account because of that thing. The market is going against you. And you stupid, you are thinking, you are wrong, man. You are wrong. That's why it's going against you. The result is clear. If you are right, it will go in your favor. If it's going in your favor, increase it. But when it's going against you, you are wrong. You are clearly wrong. Don't add. So that when it now reverse, your money will be big. No. It's wrong. You only add to a winner. You only add to a winner. Take note of that. All right. So this is an example, indecision followed by a trend bar, or you can just call this a pin bar, and then you use that, take 1:2, and then allow the other 30% to trail for the rest of the day. Okay. The other 30%, you can close it before the day close. Day traders have to know that they are day traders. Because traders get trapped and then they say, oh no, I'm going to swing this trade. No! What defines you as a day trader is what distinguishes a day trader from a scalper and from a swing trader and from a position trader is that day traders close their trade in one day. If your plan allowed you to start that trade, I'm trading in the London session and the market says start, and I start and I see that I'm wrong, I now expanded my lot size and say, let me allow you to run till Tuesday or Wednesday or Thursday. It's wrong. Take your loss and leave. It's wrong. It means that you're not a day trader. A day trader will open a position in one day and close it on that day. If you want to swing, swing and go away. Even day traders, when I set my day trading position, once I go in, man, I leave. It's a set and forget thing. That's what traders absolutely must do. When you take these positions, don't look at it. Just set it and forget. Set your alarms and go. When you hear beam, you come back. If it's stop loss, you take it. If it's target, you take it. If it's 1:2 alarm, you take it. If you're using MT4 on your phone, you cannot reduce your lot size. You have to close everything completely. So what you need to do is open, if you're opening your trade, divide it into two, so that if you're selling EU, for example, now we're selling EU, you're going to have two positions. First one will be 1/3 of the position. The other one will be, it's very simple. If you're going to trade, if let's say you found a liquidity sweep and you want to sell, you're going to open two positions at once. One of the two positions will be bigger than the other. The one that is bigger, let's say you're selling with 0.30 total. That is what is going to make up, let's say, 1% of your account. 0.30, you are going to not take 0.30 when you are setting your lot size. You're going to set 0.20 for one and enter it. Then you will now set 0.10 for the second one and enter it. So when you set this, when the market gets to 1:2, close the 0.201. So when you close the 0.201, 0.20's trade, then you will still have 0.10 trade on and running. That one, you don't touch it. You don't touch your stop. You don't touch that one. Even if the market reverses and hits your stop, you will still make money from that trade because you have already closed 70% of your profit. So you risk 1%. At 1:2, you have made 2% gain. If you close 70% of that market and the market still takes your stop loss, you're still going to be making around 1 point something percent. You'll be making 1 point something percent. So don't move your stop. Just close the 2/3 position and allow the 1/3 position to run. Then allow allow London to play out fully. Allow London to play out fully. When London plays out fully, then you can stop the trade. Or better still, you can allow it to go all the way to the end of the day, but close it before the next day. Okay? So you do your back test and see what works for you. Right? So that's an example of liquidity sweep. Another one again. So this is an example of a breakout. Okay, so here you can see the market, it just breaks out, right? This one doesn't have the liquidity sweep. The only thing it did is, of course, like I said, the market must deceive you. It must go one direction that is wrong first. So you are seeing it, it's buying. You don't know that it's not going to buy. And then what happened? It just nosedives. Right? This happens again and again. So two things can happen. Is either the market does this one that happened the following day, is either it goes up, does a liquidity sweep and crashes, or it just breaks out from one side. So there can be only two strategies here. Only two. A liquidity sweep strategy or a breakout strategy. Those are the two things you can do with London. Okay, that being said, how do you trade a breakout? Because I've been talking about the liquidity sweep. So now, how do you trade a breakout? Now, for the breakout, it's very simple. All you just need to do is from where the line is for your Asian high or low, from where the line is for your Asian high or low, all you need to do is to check, right? Check for when the market is going to break out. If I hope to sell on this day, if I hope to sell on this day and I see that the market has gone the opposite direction and is coming out, I'm observing this line. You can set an alarm, from, let's say, from 7 a.m. Just set an alarm on the lines, on the two lines. So once the market touches this, do not set a pending order. Don't ever set a pending order, because the market can just go and return back. It will not break out. So what you set is an alarm, not a pending order. No matter how busy you are, set an alarm. Okay, because some days can be a range day, and if it's a range day, the market is not going to break out. It will get to that place, it will just move, and then it will go back into the range and then come back again, and then like that. So you're not going to get a good break, and then you lose money. So set an alarm, and then once there's a breakout candle. A breakout candle is a full-bodied candle. Full-bodied candle. Full-bodied candle like this. This is full body. This is full body. This is full body. If you want to break, this is an important level. If you're going to break it, you need force. So you cannot just stroll past it. Right? You're going to see a full-fledged candle walking past the level. All right? So it's the body of the candle I'm talking about. That's what's going to break it. Okay? So once it's broken, like we can see here, what the trader just need to do is go to the previous high inside the Asian session. It's usually somewhere around the middle. Okay? Go to the previous high in the Asian session, which in this case is here, right here. Right? So this would be the previous swing. So your entry is going to be here. So this is going to be your entry. This is going to be your previous swing. So your stop loss is going to be 2 pips beyond this point, right? 2 pips beyond this point, and then this is going to be your entry. Okay, so what is going to be your target? Your target is going to be 1.5. If you do this, you're going to pass any prop firm. Any prop firm. I'm telling you honestly. You're going to pass any prop firm, because it's going to work every day. And no matter, even if you're doing FTMO that has a time limit, you're going to make money every single day. Okay? You're going to make money every single morning. See, I always use myself as an example, right? I don't have any other job. I don't have any other job. You see, there's something I was, talking with someone, and then, we're looking at it, we see our parents, the job that they have is what they used to take care of us, send us to school, pay the bills, get a car, pay the rent every day of our lives. Their job did that. Trading is supposed to be able to do that for you. Trading is supposed to give you a life, give your children a life. I always say that everything I have is from the market. Everything. Even the food I eat, I withdraw from the market to eat. Right? So it is possible. It is possible. And then I always tell traders, forget about making too much money from the beginning. The money is going to come. It would definitely come. I bet you. I was poor, I was broke. The money is going to come. Trade right first. Learn to trade right. Learn the right thing to do. Learn to find an edge. Know something in the market that you know this thing happens. It always happens. Right? It always happens all the time. Learn it, know it, master it. Then you can tell yourself, okay, I make 5% every month. I make 10% every month. Then you can now look for capital. If you make 10% every month, you're a valuable asset. I keep saying that. You're a valuable asset. If you make 5%, you're a valuable asset. 5% of $50,000 is a lot of money. It will take care of you, your family. $2,500 in Naira should be about 1.9 million. 1.6, 1.7, 1.8 million in Naira. If you make 1.8 million Naira every month, you're made. Forex can do it for you. I'm not joking. Everything I have, house, car, everything is from the Forex market. Everything. Till this day. right? So it's possible. All you need to do is to learn this thing. Learn it. Okay, learn it. I mean, how long are you going to keep answering to someone? How long are you going to keep worshiping someone? Licking their food so that they can put food on your table when you can learn this thing and make money. You can't run 20 kilometers. Let's say you have the capacity to run for 1 kilometer, for example, right? You have the capacity to run for one I think okay. Okay. I'm getting a sign from my app. I usually get that sign when my network is malfunctioning. Okay. Yeah, we live, man. All right, guys. Okay, so back to that particular example. Okay, so this is it. So this is the breakout. This is your stop, right? This is your stop. The previous swing is your stop, or the most recent swing is your stop. Then your entry is 1.5. So if this is 10 pips, your entry, if this is from here to here, let's say from here to here is 20 pips, your target will be 30 pips. Okay, your target will be 30 pips. And I was going to explain something to you. I said that if you can move, let's say you can walk for 1 kilometer, right? You can travel for 1 kilometer. If you can travel for 1 kilometer, then it will be safer for me to say, okay, I know that this guy can run for 1 full kilometer, right? For my own safety, I will just, I won't, I won't, I won't put my target at 1 kilometer. I'm going to put my target at, let's say, 700 meters. Okay, just in case he's not able to get to 1 kilometer, since that's his limit. So that's just like that's like what I'm saying here. So you want a guaranteed win, okay? Because it will increase your confidence. If you trade today and you win, trade tomorrow and you win, trade tomorrow, trade every day and you're winning, it's going to increase your confidence. Then you can start looking for how to increase your, you know, your your potentials for making more money. The only problem with too many wins is that it comes with euphoria. Okay, and euphoria is deadly. It's better for you to have a losing streak than a winning streak, because when traders have a winning streak, they think that they are gods, and then they forget about risk management. They say, now I have figured it out, now I know how it works, I'm no longer going to manage my risk, and then they go big and then they go home. Okay, so usually the best thing is, um go, if you're taking 1:2 and you're not winning, bring it down 1.5, bring it down 1.1, right? Bring it down 1:1. Start winning before you start looking for more levels. Some people are killing themselves over 1:5, 1:10, 1:50. SMC guys, ICT guys, all these people, I admire them. Okay, and I mean, I see it work, right? So, but this is what I believe works for me. Okay, this is what works for me, right? If for any reason I want to adopt it, fine. I mean, maybe over the years, If I find traders who are going to join my community, who are going to be using these strategies and they'll be making money, it's not my business. The important thing is at the end of the month, I have to take money out. That's what is important. At the end of every month, I have to take money out. Okay, so anything that will give me that money is what I need, right? So I'm not being fanciful about anything. Okay, so that's how traders should trade the breakout. Okay, so stops beyond the previous swing, breaking out from the breakout point. You must see a breakout candle. That's the only thing. We're not looking for reversal bars now. So just the breakout candle, full bodied candle across the line. Enter there, put your stop at the previous swing, and then let the market move 1.5 in your favor, and then you close out the trade. That's how to take it. Okay. In this case, what we have here is a liquidity sweep. You can see this is the high, the market moves, and then it prints a reversal bar. I do not know if you can see clearly, but this is it, pin bar, and then 1:2, down you go. That's the previous day from the one I just analyzed. This is the one I just analyzed. This is the previous day. So there's always money every day. This is a breakout. From this breakout candle here, entry here, stop loss here, 1.5, you will be filled. Here we have several attempts for liquidity sweep. Obviously we do not have a breakout because this is a body, if what do you call it, a trend bar, okay, a full-fledged bar breaking out, but it did not have a follow-through bar. Okay, it did not have a follow-through bar. A follow-through bar is after the breakout bar, we want to see another bar that confirms that it's going up. Okay, and then if I set my order 1 to 2 pips above this point, it would not be filled as at this point, right? So but let's just assume that you take this trade. Even if you did take the trade, okay, and let's say you thought the market was going to buy. Okay, if you thought that the market was going to buy and you took this trade, because the only people who will not take this buy trade are the people who actually knew that the market was going to sell. So if you knew that the market was going to sell from the London session, what you do is you of course, if you had taken the pin bars or whatever here, right, you might have been stopped out, except for this one. If you took the first one, this one will surely stop you. If you took this one as a reversal, this one will stop you. If you took this one will not stop you, because I mean they are both at the same point. Okay, and you have 2 pips, so you would have been able to make this money here. That's if you knew that it was going to be red. But if you thought that it was going to be green, meaning that you were wrong, right, and you tried to buy, okay, so if you tried to buy here, you would have been stopped out. Okay, and then once you're stopped out, don't struggle with it. Just know that you were wrong about your analysis of whether it was going to buy or sell. Okay, so but this thing works, right? Now you can see this one is just too clean. This is a clean liquidity sweep. Market just from this point, I mean, what is it going up to do? Nothing apart from going to stop people out, right? Nothing apart from trying to deceive people that is going to buy. Nothing. It has no business going up. It's already here. Why not continue down? No. It needs money. So it needs you to open your position to buy before it will eventually sell. So market is going up. It intends to sell, but it's going up. Now it goes up, goes to this point, and then it gives you this big green bar. This is a big white candle, huge white candle. It's a climax. And then what do you see? Indecision bar followed by a trend bar to the downside, and then market falls, right? And then see how many times your entry is being tested. That's why when you place the trade, you leave the screen. Okay, you don't need to watch it, because if you watch it, you're going to exit that trade prematurely. Okay, so I can go on and on. Okay, I can go on and on. Another liquidity sweep, but this time we do not have a good signal bar. So according to our rule, this trade will not be taken. Okay, so but you can see it's almost the same thing every day on any candle. This is a breakout. If your entry was here, your stop was here, you're aiming for 1:5. From here to here, 1:5. If this doesn't feel you, somewhere here will feel you, right? So you just set it and forget it. So you can see over and over how many times I've showed you. This is another, liquidity sweep. You're taking your entry here. Those who are aggressive put their stops right here. Those who are conservative put their stops at 20 pips high. At 20 pips high, you know that the market is going to sell. And then your entry is here. You take 1:2, 1:2, or you take 1:1.5. Okay, from 20 pips high. So 20 pips stop loss from Asian range, and then from the Asian range down, you must take at least 30 pips. At least. Okay, so you can see that so far I have an almost 100%. Almost 100%. So whatever you have to do, just make sure you do your back test. Make sure you do your back test so that you know how to trade it in real time, because trading is easy at the middle of the chart. At the middle of the chart, everybody's a guru. It is at the right edge of the chart that you make your trading decision, not at the middle. So you need to practice. You need to back test it. You need to forward test it as well on maybe a demo or a small account before you actually, start to go live with it. It's almost time for the match. I have to round off. I think we're going to have another edition of this particular presentation so that I can give you a complete set of rules that you can follow, because it's almost time I have to close. Usually when I teach, if you allow me, I will go the whole day. Okay. So in the next I'm going to look for one time to fix the next class, hopefully before the end of the month. All right. So before that class, I will announce. All right, I will announce so that you can join in. Okay, before the class, I'll announce it. So some of the things that you are taking home today is that London has liquidity sweep. So it goes the wrong way first before it goes the right way. That's the nature of London. Another thing you have in mind is that the day could either be the trend day or a range day. A trend day is the day that the market is moving. A range day, up, nor down. What are you taking home? You're also knowing that from the Asian session, two things are possible. After the Asian range, if the market means to sell, it will break out and continue to sell. That's one thing that can happen. Traders can look at the breakout, place their stop, and place their target. Or if it doesn't want to behave that way, it will move. After moving, it will pretend like it's going to go down, but it's actually going up. This is the second case that can happen. And I told you that I'm going to show you how to know whether it's going to be a red bar or a green bar, meaning if the day is going to sell or the day is going to buy. I'm going to show you in another class, okay, because I won't be able to do that now because of time. Okay, traders have to also know that what else have I taught? Okay, yeah, there are different types of bars. Okay, the most important ones, you have the pin bar, you have the indecision bar, together with a trend bar. So what you're seeing is the market is indecisive and then one side wins. Okay, so this is an indecision bar followed by a trend bar. All right, so that's going to show you that if this is green, after this fight, after this indecision, after this spinning top, if it becomes green, it means that it's going to buy. After this indecision, if it becomes red, it's showing you that these people have fought and the red has won. Another important bar is usually the engulfing bar. Okay, so you have red followed by white in the case of a bullish move. So the market is going up, you're going to see red followed by white. Okay, so these are some of the few things that I have mentioned. I know some of the things you're supposed to go home with. Okay, and I think I mentioned a couple of things about risk management. Okay, so you're splitting your position into 70-30. All right, so 70 you close it at 1:2. 30 you close 30 at before 11 a.m. when you have the London break. Okay, when you have the London break, you close at 11 a.m. All right, 10 a.m., 11 a.m. All right. So you can come back to it if you would like to. All right, while you wait for the next class. So in the next class, I'm not going to mention so much of all the things that I have said now. I will just be going straight to showing you the strategy rules. Okay, so the rules that you follow to enter, to exit, and all those things. All right. I think that'll be all for now. So I want to encourage you guys. I want to encourage you to, join the group, because I'm going to be those of you who are not on the Telegram group, try to join the Telegram group, because I'm trying to build like this new community. Okay, so I want to work with new set of traders, right? The traders who gonna form a big team. All right, big team of traders. So I'm gonna have a free mentorship program next month. The details I don't have yet. Okay, so I'm gonna give you that details on the Telegram channel. So join the Telegram channel. I'm very sure that the link is on the description of this video. Okay, so join the Telegram channel. Join the mentorship program. So it's going to be, we're going to have that program for some time. All right, so I'm going to show you some concepts, show you how to trade. We trade together, and then you become profitable. You pass through the pro skill set, you become profitable. Then we start to trade real money, like actual money, and then you're going to make a lot of money. I can assure you. Okay, you're going to make a lot of money. Yeah. So what I can say for now is go through what I've given you, try to rewatch this video again, look at some of the things I've said, and then observe them before the next video comes out, so that in the next class, if you have questions, you can ask. Okay, so what I'm going to show you is you got to make sure that for you to know whether it's red or green, you got to make sure there is a clear zone on the higher time frame. Okay, there's a clear zone on the higher time frame. Once there's a clear zone on the higher time frame for a sell side, right? Higher time frame for intraday traders is supposed to be the H4 or the H1. So if H4 is showing that the market is selling and there is no resistance, there is nothing in the way of that sell, it shows that the London move on the sell direction is likely going to work out. It's as simple as that. So, but I'm going to show you how to know if there is a clear zone. Okay, so there's still a whole lot I gotta teach you. There's a whole lot. I'm going to tell you, don't do this, don't do that. What we're looking for coming in, liquidity. We're looking for money coming in. All right, and if the money is coming in, then why not? The GBP for this, please let me know what you think about this class in the comment section, and do well to subscribe, because so it's still in the embryonic stage, right? So I know that very soon I'm going to come back to say, oh, all you, my first 100 subscribers, all you, my first 50 subscribers, all you, my first 10 subscribers, all you, my first 10 subscribers, all you, my first 20 subscribers. I'm going to give you maybe thing. I'm giving out a prop firm once every month, starting from May, starting from June. Contest, and then when your demo meets the criteria, I'll give you 5k. I'm going to keep doing that until I am very satisfied with the quality of traders that I have gathered. Okay, so thank you so much, guys, for participating in this class. I will teach. This is the only thing I do. I'm a forex trader. I don't do anything.